All right, guys, bang, bang. I've got Will here with me. Thanks so much. How you doing, man?
Doing well. How about yourself, Pomp? How's Miami going?
I'm doing all right. Great way to start off a Saturday morning with little on-chain metrics. Let's just jump right in for the week. It seems like we basically are just trading between like $32,000 and $40,000, and it's like range bound. Explain a little bit kind of how you see where we are right now.
Yeah. So, when you're just looking at just the order books, I mean, there's a lot of buy orders set between, like 32 to 30K. And there's a lot of buy orders set between, 40 to 42 in that range. So just looking at that alone, we're going to need a lot of volume to kind of break out in either direction. And until then, we're just kind of range bound. So, we're kind of in this zone where it's almost like no man's land, where no one wants to take, a directional trade in either way, because people are just waiting to see, kind of what the market is saying. We've had relatively low volume now heading into the weekend. Weekends are always lower volume than weekdays. So it'll be interesting to see perhaps if we have any moves with low liquidity. But yeah, for now, I mean, we're just pretty much range bound. And it's one of those things where, in my humble opinion, this isn't where you kind of, take any trades. You just kind of sit it out, maybe trade the range, maybe, pick up some at the bottom of the range and then take some off at the top. But aside from that, I think you're just waiting for like confirmation in either direction.
And talk a little bit about the futures open interest. That's super interesting that you kind of called out that it's pretty flat.
Yeah. So after we had that big, liquidation event, whatever it was, like 2-3 weeks ago now, the futures open interest is pretty much just completely flat. We've seen it come back a little bit, but not substantial at all. And then the futures contracts, like you can go in and see, the number of contracts that have been opened. And since we had that drop, I mean, it's pretty much just dead. And for anybody that is subscribed to the newsletter, if you look on that first picture that's up there, that bottom part of the chart, that's the futures contract. So you can see after we had that big liquidation event, I mean, no one wants to step in here. People are just waiting to see what the market's telling them at this point.
Yeah, and it also feels like I know you've called out the dry powder and stable coins, and like there's just a bunch of stable coins that are just sitting there. I'm assuming waiting until people know which direction to take. But what are you seeing on the stable coin dry powder?
Yeah, so Glassstone has this metric called stablecoin supply ratio, and all it does is it takes a ratio of the stablecoin market cap to Bitcoin's market cap. And so the way you can kind of think of this is when the metric goes down, there's more stable coins in relation to Bitcoins, right? So seeing this metric really take a dive down in the last 2 weeks, I think says twofold. First of all, obviously Bitcoin's market cap has gone down a little bit, but also the fact that there's a lot of stable coins. And I think that kind of illustrates that, there's money sitting on the sidelines, similar to what we were just saying, that's kind of waiting to see, a directional trend in the market. So I've heard from a couple people that kind of deal with institutional investors that, they're looking to get lower bids filled, perhaps in, the 20s, right? But if they see that confirmation to the upside, if we have a solid break into, the upper 40s, then they're more willing to step in, once they see the momentum that is going back to the upside. But I think for now, people are just kind of playing chicken, and you see that in not only the futures contracts, but also the stable coins. It just seems like people are just waiting it out on the sidelines for now.
Yeah, and you have this chart where there's these like clusters of price distribution and kind of where a lot of volume trades. And I know that you've called out previously between $53,000 and $59,000, there was a ton. And then also previously between $7,000 and $11,000. But it feels like you're seeing a third one form here, kind of in this range. So talk a little bit about those price clusters and how people should think about what that really means.
Yeah, for sure. So this metric it's called UTXO, realized price distribution. And it's just this kind of fancy term for, you're looking at this this profile. If you were to flip the chart vertically instead of horizontally, you're basically looking at a volume profile of the on-chain volume, not exchange volume, but on-chain. So Yeah, like you were saying, we had this big kind of distribution zone between 53, 59K. And, that was one of the reasons why I was, pretty bullish when we were in that zone, because it looked like a really strong zone of support. We had 10.5% of supply had moved above between 53 and 59K. But yeah, once we lost that 53K mark, I mean, it was pretty much straight down from there. And then we had another kind of big support at 47, dropped from there, and then now we've kind of found this this range in, call it, once again 32 to roughly 40K is what the on-chain transaction volume is saying as well. So in this zone, we've had about 10.25% of supply exchange. Which is, when you, for anybody that subscribes to the newsletter, and I'm sure that we'll throw in the charts in as well for this video, but you'll see these three very distinct clusters. So you have that one between 53, 59K, this one between 32, 40K, and then you also have one from earlier on in the bull market where, perhaps some wouldn't even consider this the bull market, but between 7 and 11K, like you were saying. So that's about 19% of supply. And that's like a huge support zone there. I don't see us going that low, but if we were to lose, just to, kind of stay neutral, if we were to lose the 32K, we kind of have a little bit of support in like 26, and then you're looking at some perhaps in around 22, and then one last big support at 20K. So if we were to break down out of this range, I would be looking for those, especially 20K. I think is, I'm not saying it necessarily would get that low if we broke down, but that's a really strong support zone there with the on-chain volume. And then also I know, that's a big technical support as well, where, obviously that was the previous all-time high. So that'll be a spot that a lot of people are looking to buy as well.
What's up, guys? Before we continue with this interview, I want to quickly talk about our sponsor, Kraken. Kraken's one of the most established and secure places to buy cryptocurrencies on the internet. They've been at the forefront of the Bitcoin and blockchain revolution for over 10 years. Their mission is to bring crypto to the masses. So whether you're an OG or this is your first trade, Kraken has all of the tools that you need to achieve financial freedom. With more than 60 cryptocurrencies available, you can invest in all of the most popular projects in the industry, including Bitcoin, Ethereum, and many, many more. Kraken also provides in-depth articles and guides on every single asset that they list, so you can get up to speed quickly and make smarter investment decisions. Visit kraken.com/bangbang to get started today. Again, that's kraken.com/bangbang. All right, let's get back into this interview. I hope you're enjoying it.
And then in terms of where the selling's coming from, it feels like it's just all new coins, right? I know you've called out in the analysis kind of the 1 to 3 month old coins and then also 3 to 6 months. So what's going on there?
Yeah. So, because of, the Bitcoin's open ledger, we can track all the different cohorts, ages of the coins. You can see, when coins move, and then when coins move out of a wallet, they're considered spent. So just looking at, the different cohorts of coins by age, you like you said, we're seeing a lot of selling between that 1 to 3 month and 3 to 6 month. So perhaps, these are funds that maybe accumulated in, the 10 to 20K band last year, at the end of last year. And then also, in that upper, 50 to 60K range. And those coins, of course, are selling at a loss. But I think, one thing to take away is that a lot of the selling is coming from newer market participants rather than people that have been in this market for a long time. And you can see that through this metric called dormancy, which basically just looks at the amount of it's not necessarily an average of the coins of the age of the coins. It's a different metric, but this is looking at something called coin days destroyed. So if you have a coin in a wallet for 1 day, it has 1 coin day. And then once it moves, it has 1 coin day destroyed. Or if it's in a wallet for 10 days and then it moves out of the wallet, it then has 10 coin days destroyed. So this is looking at a ratio of that to the on-chain volume. And so you can kind of get this clear signal where trending down since you call it, January, it's been younger and younger coins selling, which I think is a important trend to see, where, at the tops historically, it's been younger coins selling kind of towards the middle to beginning of the bull market, and then the older coins are coming in. The older coins are being sold into strength, towards the end of the bull market. So I think the fact that we're not seeing a lot of the older coins selling, I think is some signal, because these are the people that have been in the market the longest. So I think they're the ones, they're kind of the smart money in the space. If we start to see these older cohorts, 3 to 5 years, 5 to 7 years, 10 years plus, if you start to see those people selling significantly, I think that's something to kind of raise an eyebrow to.
Yeah, and then what about realized losses as people sell?
Yeah, so realized losses is just, if you bought a coin at a higher price, sell it at a lower price, you've realized the loss. If you bought it at a higher price and you're still holding, then it's unrealized. So, this is just saying people are selling at a loss, and they have been since that big capitulation event. And this is trending down, though, which is a good thing. So it looks like, these coins the weak hands are almost done selling off. And we're getting close to a bottom out in realized losses. But very similar, SOPR, which is similar to that. Instead of looking at the raw number of the losses, it's taking a ratio of the profit to loss of the coins throughout the day. And we're getting close to breaking even on that. There's this, for anybody in the newsletter, you'll see this black line go across kind of the middle of the screen. And that's kind of the threshold for breaking even, which is 1, a ratio of 1. And we're kind of right on that line. So that's something I'd be looking to watch as well, as you start to see, whoever's going to capitulate, sell at a loss, has kind of done so. And we're still in this, while we're ranging, you have, still some of these coins that, are looking to exit the market, are selling at a loss, while you're seeing the long-term holders come in and scoop those coins up. So that's kind of like the process that we're in, where I know we've been saying this for weeks now, but it still is weak hands selling to strong hands. It's just, a question of how long is that process going to take?
Obviously, if there's people selling, there's somebody else buying, and it seems like those are all long-term holders. Yeah,
100%. So, I put together this chart where you're comparing the long-term holder supply holdings versus the short-term holder supply holdings. So Glassnode for this uses 155-day threshold, which comes out to 5 months to determine if an entity is a long-term holder. And you're seeing those entities have been stacking really heavily, while it seems like the shorter-term holders have been selling off pretty significantly. And it's interesting because over the last month, the selling from the short-term holders has offset the buying from the long-term holders. But over the last week, we've actually started to see the long-term holders are now offsetting the selling from the short-term holders. So it seems like we're flipping back into this accumulation where either A, the long-term holders are buying more, or B, the short-term holders are selling less. But you are starting to get that transition from the short-term holders overpowering the buying of the long-term versus now we're starting to see long-terms over the last week stacking heavily than the shorter term, and that's something that I think I would like to see going forward. And so that's age. But then if we're going to talk about like the size of the cohorts, you've had this pretty clear downtrend now for like 2.5 months. More like 3 months, where we've seen less and less whales coming in on the blockchain. And some of this is, so for Glassnode uses a 1,000 BTC threshold for, calling someone a whale. And so part of this is possibly just these entities reshuffling their holdings into smaller wallets, because you've seen while the whales over 1,000 BTC has been trending down, there's also been a pretty significant move up in 100 to 1,000 BTC entities. So I think there's definitely some reshuffling of holdings there. But overall, the trend of entities over 1,000 BTC has been trending down, while retail continues to trend up. It seems like retail has really been stacking harder than they almost ever have in the history of Bitcoin. I mean, I have this chart, and it shows the supply held by these smaller entities, and I mean it's pretty much just like vertical right now. So I think that that it's two things. It's bullish for Bitcoin adoption because you have whales scaling out while retail is scooping up those coins, and obviously the coins are getting more widely distributed. So there's that aspect of it where I think it's bullish for adoption. But I think in terms of price, you're gonna need to see a jolt in whales to kind of do the heavy lifting to get us that momentum back to the upside. And possibly that's something that we'll see if we have a definitive move to the upside out of this range. We'll have to wait and see. But I would be, if we have a strong move out of this range and we start to get some momentum back to the upside, I'm going to be watching that number of whales chart closely to see, perhaps some of that money that's waiting to get a position now and trying to get the best position possible. If they get that confirmation, perhaps if they'll step in, but that's something I'm keeping an eye on for sure.
Got it. So really to summarize for this week, it's basically we're in this kind of range bound, kind of trading. There's not tons and tons of volume when it comes to futures open interest. There's not tons of really takeaways in terms of where we're going directionally. It kind of feels like when we break out, it's going to be violent in either direction. And people are just kind of waiting and seeing which direction that's going to be. But if we do break out to the upside, you'll see people pile in, and then also on the downside, you also see people kind of pile in. It's just right here, people are a little uncertain about the short-term future.
Yeah, that's my base case. And I think, you just need one person to kind of step in and make the move. And then people will follow in either direction, I guess. But, supposedly there's an announcement. I saw a Bitcoin conference put out something that Jack Mallers is making a big announcement today around 4. So maybe that'll be the announcement that pushes us up. We'll see what happens.
Absolutely. All right. What is the one thing you're going to be looking for over the next week in terms of metrics? Is there one thing specifically you're looking at, or you're just going to kind of look at it in totality?
Yeah, I think, this stuff is you can't necessarily look at one thing. You kind of have to have, I like to look for confluence across multiple things where, if you have several indicators that are, preferably uncorrelated, that are all telling you the same thing. And then you also are kind of looking at the technical side of things, where I look mostly at the on-chain data, but I also look at, obviously some of the technicals. And if you have, your fundamental analysis, on-chain and technicals all lining up, kind of saying the same thing, statistically, the odds of that are way higher. So I think you need to look at multiple things. But if I were to just kind of pin it on a few, I think the whales is definitely one thing, like seeing that jolt upwards in whales. Also looking at the futures open interest, if we start to have a little move up and then all of a sudden all this leverage piles in, which is possible. I don't think that would be super bullish short term, because all of a sudden you have this big incentive for whales to flush that leverage out and scoop up some cheaper coins if they can liquidate all that leverage. So that's something to look at. And then I'm just still following this trend with the short to long term holders. That's it's interesting because in 2017, obviously we have a very small sample size with these cycles, but in 2017 there's this kind of clear dichotomy where the long-term holders were selling off into strength throughout the whole cycle. The short-term holders were buying the whole way up, basically buying the smart money's bags the whole way up. But in 2013, you saw that, and then when we had we had 2 double pumps. So we had a big parabolic advance, drawdown, like I think peak to trough was like 80% or something like that in a relatively short amount of time, like I think a few months. And then we had the second parabolic advance. Between those, you saw something similar to what we're seeing now, where the shorter term holders are selling off in the middle of the cycle, and then the long term holders are coming in and stepping in the cycle. I think this is something we touched on last week, but that's a trend that I'm interested in seeing how that continues to play out moving forward, because from that aspect, this is definitely not looking like 2017.
Absolutely. Where can we send people to find you on the internet or subscribe to the newsletter that you're writing?
Yeah, so I'm on Twitter at W Clemente, III, and then I do a newsletter every week. The Friday one goes out with Pomp, obviously, and then Monday I do it on my channel. My channel is BTC by WC3.substack.com. You can subscribe there, and I'm always putting stuff out on Twitter. I just, whenever I see something interesting, I'll throw it out there. So if you want to follow me on there, I answer. I'm super active on Twitter. So if you have any questions, or if you want to say, hey, Will, this is something really cool that I saw, and I'd love to chat with anybody about the market. So feel free to reach out.
I think you're doing a fantastic job. I think everyone else is really enjoying it. So keep up the great work, and we'll do it again next Saturday.
Appreciate it, Paul. Have fun in Miami, man.